Hey everybody, it's Pete. Good morning. It's Monday morning, December 7th, 2020, and December is going like lightning. I think that everybody and every place you read about right now just can't wait for this year to be flushed into the background so we can start heading towards next year. So we're getting a little bit of back and forth right now where we're seeing a little bit of profit taking. The market has basically just keeps melting higher. If you speak to any professional trader right now, there's a disconnect intraday, especially between the amount of new stocks that are upticking and making new highs versus the market that seems to be drifting higher right now, which is fine. I mean, there's still plenty of opportunities right now, but you need to be a stock picker and you need to make sure that you're not chasing stuff. Like we have a lot of stocks that had really big moves last week. I think Nordstrom is probably one of the top ones on that list right now, where you don't want to be getting involved after the move. You don't want to be reading about the chart on Sunday or an article over the weekend after the stock has already moved. You need to mix those two things. You need to mix profit potential and justifiable profit potential, meaning it's worth you accepting risk on the trade, and then you need to find a good spot to manage risk. And those stocks that kind of took off, and if you missed those entries, you're kind of left on the wrong side of the boat after it's already gone up. So that's really the big part of what I want to make sure that I, introduce you to every day and every week, which is the difference between just getting involved versus getting involved like you mean it. In the boot camp, we call that trade like a pro. We have a hashtag trade like a pro, which means that we're approaching every single thing we do from an order flow perspective down to reading the tape. And we get a lot of questions about what tape reading is and the way that we do it. You know, there's probably 100 different examples of it. So first order flow is it obvious? Can you look at a stock and say, is it smart money? Is the market or big hedge funds or big institutions clearly doing something in that stock? If the answer comes back yes, in the way that we look at it, the next step is you do tape reading. And tape reading is determining all of the potential pieces to a trade that you can put in there that says whether or not, yeah, this is a really good idea and there's a high probability of my profit target being reached versus my stop loss. And this is a key here, in that context of building that argument, when we learn to read the tape, that last part about reaching my profit target, you have to add in there, and when you're reading the tape, is how far has the stock already gone compared to what it normally does. So that's where we get into these like JWN, Nordstrom, where it's gone pretty decent and a lot more than it normally does. So you have to say to yourself, if I accept risk right now, what are the odds of me risking $1 to make $3? What are the odds of me risking $3 to make $9 or more? If the odds come back, that's a part of tape reading. That's a part of building the argument. You have to say, you know what, at the very least, I'll work the order if I like it longer term, but most likely if it's gone too far, you scale back and you don't get involved. Which kind of brings me to a stock that's going to be everybody's going to be talking about today, which is Kodak, KODK. We talked about it a little bit in this morning's Stocks for Breakfast video, where I cautioned that it is the trade setup that usually leads to really big, really quick losses for experienced traders who don't know what they're doing. They log in, they see a news story, they see the price in their scanner, and they get involved, and they don't realize that you need to be able to determine when that catalyst has changed, and if the catalyst has what we call in the trading flow legs. If the catalyst doesn't have legs, it could come back and really bite you in the butt very quickly and lead to some pretty big losses, especially when the stock explodes to stratospheric levels very quickly. You're chasing it on the way up. And these stocks that have lower price tags on them, you can get a lot of shares and you get hurt really quickly if you don't know what you're doing. So we're going to talk about now very briefly, without getting into too much detail, because we talk about this ad nauseum over and over and over again. And I drill these principles in the boot camp, day after day after day, trade after trade after trade, is you need a spot to read the tape. You need a spot to say, this line in the sand is how I'm going to read the tape. Now, what's interesting is you probably already know how to read the tape, and you're probably pretty damn good at it. And the reason I say that is everybody thinks like reading the tape is watching the ticker on CNBC go across and the old ticker tape, and that is what it was. That's what you watched, but that's not how you do it. There's a big difference between the two. So what I mean by that is you know how to read the tape in every single stock that you're in. You're like, what are you talking about? I never done that before, right? Yeah, but let me ask you something. If you buy a stock and it's moving in your favor really quickly, Nobody on Wall Street knows how strong that stock is better than you right now because you have a reference point. The reference point when you read the tape is your entry price. And if that stock is here and starts going down, nobody on Wall Street knows that stock better than you either because your reference point is telling you it's going pretty fast in the opposite direction. So a part of tape reading is finding that spot to use as a reference point before you get in the trade so that you can determine that's my level and it's moving away this way, moving higher. Say, okay, that's my reference point. I could clearly see, and now I can manage my risk or at least determine if it changed and goes in the opposite direction. So the key to beginning to learn how to be a tape reader is you need a reference point. You need a significant reference point. So if you choose to trade Kodak today, whether you're day trading it or swing trading, you need to choose a reference point. It could be yesterday's closing price. It could be the new price every hour that the market starts. It could be today's high. It could be today's low. It doesn't matter what it is, but it needs to be definite. So we're going to take a look at Kodak. We're going to see what it did in July. We're going to see where it is right now, which right now, last I looked, it was up 61% pre-market because the news that caused it to explode and then come all the way back down has now apparently been verified that there was no wrongdoing. And now the stock is actually up again today. So what I'm giving you is a heads up as a trade management strategy to read the tape in Kodak before the market even opens. Pick a line in the sand that says, this is the number I'm going to use to determine if the stock is going up or down prior to getting in the trade. Then obviously you're going to use your entry price, but you need to say, okay, this stock is still valid in the direction I want to trade it, or the stock has now reversed. Now you could have bought it up here and the stock goes down to here. You need to be disciplined. You need to be flawless because these ideas go quickly. And that's why I say, and this is from experience early in my career, when I was chasing price, when I was chasing news, if you don't know how to read the tape, if you're not fast at making decisions, you can lose a lot of money really quickly. I want to help you avoid that by giving you, here's the line in the sand. It could be your entry price. It could be whatever price that is during the day. Even if you obviously you're not going to use yesterday's close because it's up so high. So you probably want to use either today's open or some moment in time during the day today. It says that's the definite level that's going to tell me the stock is still a buy. If it goes below that level or if it goes above my stop loss, I'm out and I'm done. And then I'm looking for it to get to that reference point again. So we're going to take a look at that. And we have a pretty decent list. Energy stocks and financials are sitting right there again, and Uber and Lyft are hanging in there, which is interesting to see. So we're gonna head over to the charts, and we're gonna first take a look at Kodak and show you exactly what I mean. So this is the trade in Kodak, and just in case you weren't aware, this is a real move. It literally traded, let's say, from $2.50 all the way up to 60 in 1-2 days. This is a 716% return in 2 days. Now, I can tell you also for a fact, because we had new members in the boot camp chasing price. We had members on social media, messaging me and people emailing me saying, what do I do? I'm stuck because this thing exploded. I bought it in the 50s. I had fear of missing out and I didn't have the discipline to watch the thing turn around. So you need to pick intraday, whether it's a hourly chart, whether it's a 15-minute chart, it doesn't matter if it's a 5-minute chart, you need a line in the sand that tells you this trade is still valid, buyers are still in control of the stock, and you're okay with continuing to buy it as long as that happens. So again, we're not going to get into the specifics of it because we're not going to talk about day trading here as far as the actual structure of doing it, but I'm giving you a heads up of what professional traders do in this environment. If you choose to chase the stock, which is now up 70% pre-market, have a line in the sand that tells you the idea is still valid. Another one that we want to take a look at in the same vein is DocuSign. DocuSign and the price of $230 has been a level that we've been waiting for it to get through. If you haven't been a member of our community, you can see that it was something that we traded very actively all the way right up until July. The tape changed. We read that the tape changed. That's what tape readers do. We stopped trading it and we said 230 is going to be the new level. Earnings last week exploded through 230, and now it's back on our radar, and we're going to use those same tape reading principles to look to initiate new trades. Some other trades that we've been trading for, that we haven't traded for a while, that were, again, very much in our watch list midway through the year, which is SEC Limited. Stock still has not produced a profitable quarter where they actually made money, but they're losing less. They're getting closer to being in the black, and nice breakout yesterday. We're looking for today to follow through to be well bid. I want to point out FSLY because some people are messaging me about this, both here in social media as well as in the boot camp. This is a good example of a stock that has 1 day of buying versus longer term order flow. And if you choose to trade this breakout on 1 day of buying, you are going to need to work the order because you don't have a lot of proof. You don't have a lot of feedback from the smart money. It could happen. It could unfold that way. But 1 day of buying is not enough confirmation to get in there with size. So work those orders. We'll be taking a look at that one today. EMR is another one. We're going to get into a few stocks in the same sectors. But this one actually traded with some good volume, good breakout, really nice punch through out of a small range candle, which leads to an leads to an expansion in volatility. So we're looking for the 78 was really the breakout level. So if you want to have a little bit of a tighter risk here, I know 76 was yesterday's level, but 78 was the real level. So if you're looking to get long this stock today, it would be above Friday's high with 78 as the stop loss. I hope that you've been listening to the fact that we've been doing a lot of sector rotation type stuff where money's flowing into solars, money's flowing out of solars, money's flowing into electric vehicle stocks. Now the money kind of is drifting in electric vehicle stocks. And now 3 weeks ago, we said energy stocks exploded, let them pause, let them hang out at that level of resistance. They did that. And last week they started to wake up again. And we're looking at a new breakout in FANG today. Also looking at PSX, which also had a nice breakout. And the fact that they're pulling it up, they also have room to go. So really what I'm training your eye to do right now is to really pay attention to where and which sectors are finding leaders and then trading the leaders in then sectors. So PXD is another one. Lyft and Uber. Look at these guys. Really good, clean moves. So we're going to take a look at these again. So this was the big resistance level we needed to get through. 54 is the next level here. I think that both of them are trading pretty well. If we zoom out here at Uber is actually now at all-time high. So we're looking for some follow through there as well. And look at these, look at the confirmation. Look at these two really good, clean closes near the highs. Excuse me, Western Digital. Western Digital is a good example right now of a stock that you don't want to chase today, but you want to have in your watch list. Next level is around 60, which appears to be like a nice trade, right? At $8 from where we are right now. But this is the first time it's broken through, and we've just gone now from 45 to 52. So it's already just gone $7. I am actually waiting for the stock to pause before it makes a run at 60, maybe even pull back 1 day. Micron's another one that, again, you're starting to see the clues of stocks breaking through and doing so in the same area. So you can see Micron now has exploded through multi-year levels. Now, here's the thing with Micron as well. We had a pause here at resistance. We had a pause at, and again, resistance is the last place sellers did something significant. Excuse me. Now we have 1, 2, 3, 4 well-bid days in a row. So in this case here, it's not quite the same as Kodak because the catalyst is different, but you're chasing price. So you don't want to be the buyer on the 5th day to be, you're buying it from the person who bought on the breakout 4 days ago. You want to be the person that recognizes the optimal entry before it happens. So now what we're looking to do is we're looking to trail stop higher on a profitable swing trade, but not look to buy new shares at this point. You want to trail it higher, look for a pause, and then look for the next move. So again, we're setting up the week, especially because the market looks like it's going to open up lower today. Caterpillar. Caterpillar was an amazing stock to be day trading on Friday. Now it looks like it finally punched through the 176 level. Can open up a little flat today. I have personally found this stock a little bit harder to trade longer term. And when I say longer term, I'm talking about that swing trade window. However, it's in my day trading list right now as a stock that is just right at the top of the list of when it trends intraday, when order flow is in there intraday. Look at that intraday price action on Friday. You know, we're talking about 175 to 183 and change, $8.50 without really a pullback intraday. That's what happens when you're in the right stocks, when you understand how to find order flow. So that's going to be in the list again. The financial stocks keep teasing us. Again, we had a really good, clean breakout on Friday. I'm just going to go through the list of the stocks that are in my watch list. Citigroup, Goldman Sachs, Morgan Stanley, and one that we've just added right now, STT, with a really good, clean breakout. Now, the financial stocks, as I just mentioned, are kind of joking around, but really not. They've been frustrating. The tape has not been very clear on them. The order flow has been clear, but the tape hasn't. So you want to line up both of them where you're obviously getting buying pressure and it's being held, which creates opportunities. So what I'd suggest doing, if you're looking at the Citigroups of the world, the JP Morgans, where the order flow has now woke up, the bullish order flow is clear, but the daily charts are kind of going back and forth. I'd be watching them using the normal setups that we watch, but use the weekly charts. This way you're not shaking all over the place where it's up one day, down the next day, up one day, down the next day. 5 days later, it's higher, but you got shaken out 3 days ago. I'd suggest going out to the higher time frames, the weekly and the monthly charts to manage those positions. You're going to have a little bit wider stop loss, but just lower your share size in exchange for the wider stop loss, and it should be pretty easy to read the tape in those stocks at that point too. So market's opening a little bit lower today. Not really a big deal, nothing to read too deeply into. We keep creeping up to new highs, just seeing a little bit of profit taking before the end of the year. And really based on last week, we had some pretty good moves in individual stocks last week too. Going to be interesting to see if the electric vehicle stocks wake up again, the NEO, XPEV, LI, Ride, even Workhorse could pop into that, and Blink, BLNK. If they do, they're incredibly tradable, especially as a day trader. I haven't really dipped my toes in there yet as a swing trade because I want to see feedback. I want to see proof. I want to see from more than one day to the next that buyers, significant buyers, the smart money are actually holding those stocks and creating new levels. If that happens, then we can start to talk about building positions. If you have any questions about this stuff, absolutely leave me a comment below. If you have a trade idea that you'd like discussed, leave it down there as soon as I can. I'll get back to you. Please subscribe to the channel. That would be awesome. And look, if you want to trade together over the next 30 days, now's the time to do it. Get yourself prepped for a big 2021. Invest in yourself now. Get into the boot camp, and you'll be surprised how awesome it is. We have a great community. Have a great day, everyone.